Welcome back. CEO advisory firm Teneo putting out a new survey this week showing continued confidence in the global economy, finding 73% of CEOs expect the global economy to improve in 2026. That's down slightly from last year's surge in confidence following President Trump's election victory. CEOs also expecting an uptick in M&A and continued AI spending growth throughout the year. For more on the survey, let's bring in Teneo CEO Paul Keary. Paul, it's great to have you back. Welcome.
Thank you.
So where's the optimism coming from?
Well, I think this time last year when we spoke, there was unbridled optimism for a resurgence of M&A, regulatory streamlining. It has come to pass, right? 40% year-over-year increase in M&A, regulatory streamline has occurred. I think the trade and tariff friction in the system, CEOs are craving a normalization of trade and tariffs, but still a lot of expectation that M&A will continue, growth will continue, and the other key I think constant year over year is all roads lead to the US. US is the largest beneficiary of foreign direct investment, largest beneficiary of new investment by domestic companies, and that's driving a lot of this optimism. Obviously, you can't have a conversation about growth without AI, but it's that amalgam of factors.
And you said last year their optimism came to pass. I was going to ask how accurate generally this group is when it comes to making predictions.
Yeah, so far so good. I think the unknown has been for everyone the roiling aspects of the trade and tariffs. So that was one, I think, expectation that was different vis-a-vis how they political.
How much does that hurt business confidence, tariffs?
I think the way to think about it is CEOs have had to become disruption ninjas, right? From COVID to political shifts to the emergence of one of the most rapidly expanding consequential technologies in history. So they're ready to meet challenges now than they ever have been. So the Supreme Court have to rule on trade and tariffs before the end of the year potentially. All CEOs that we talk to around the world, and we've 1,800 colleagues in 40 different cities, all CEOs are preparing for option A, option B, or option C. So there's a lot of, I think, real resilience within the corporate boardrooms to deal with challenges.
Is there a sense that, there have been a couple notes on this in the last, say, 24 hours, if the administration feels pressure going into the midterms, that they are likely to either issue cash checks or bring tariffs in further or find other ways to do soft price controls? Would that unleash activity, or is that going to put another constraint on corporates?
I think one of the things that we're seeing, we talk to the survey and talking to CEOs, that there is an unenviable amount of growth opportunity, driven by the emergence of AI as a liberator of opportunity, not just an efficiency and effectiveness tool. There's going to be consolidation across all great industries, so they're thinking more about what's the growth dynamic and ready to meet the challenges that trade and tariffs will present.
One of the biggest questions, I think, for the entire market is just how rapidly and how large we see the adoption of AI by enterprise, by corporate customers, now that so much spending is going into the infrastructure build out. What do you hear? What do you see?
One of the things that's striking from this, it's obvious, obviously, but majority of CEOs are going to spend more on AI. There is a shift, however, from AI as an investment in how do you derive efficiencies, cost opportunities, effectiveness. I think there's the new wave, which is going to release, I think, opportunity from an M&A perspective as well as general growth. CEOs are now moving into the business end of AI, which is how do you use AI as a catalyst to transform your business. So that is what we imagine will be big drivers and one of the big conversations next year. A lot of the AI conversations rightfully dominated by the AI and the CapEx economy, but you'll see all the non-technology companies started to harness AI in a different way. And one of the things that is striking also from the report is CEOs don't have the same level of patience, or have a higher level of patience than investors. Investors want return on AI investment by midpoint of next year. They have a short-term view, rightfully so perhaps. CEOs have to have a decadal perspective on how AI is going to not just derive efficiencies, but potentially change their businesses.
So it sounds like 26 might be a year of explaining a bit to the street what's on the come, so to speak.
Or being led by the enterprise, being led by the CEOs who are going to find new ways to serve customers, new ways to grow market share. It's not just about, I think, reshaping their current business, but finding new ways to explore new opportunities.
So where do you come in? What are the top sort of advisory roles that you're gearing up for next year?
I think there's going to be a lot of, business model change. I think there's going to be disruption across a whole host of sectors, operational, geopolitical, reputational. I think businesses who have a current hand across the global operations will have to change their business model in light of new technologies, in light of re-globalization, in light of an overhang of geopolitical issues, including a continued war in Europe. So I think the opportunity that we're seeing is companies are going to reimagine their businesses.
Yeah, I mean, you have here 60% of CEOs and investors agree that deglobalization will accelerate in 2026. What does that mean? What does that look like?
You know, you've dealt with, again, these CEOs who have dealt with change as a constant. You know, one of the things I find interesting is India, for the first time, has emerged as a viable contender to China as that key trading partner, and potentially over the next decade replacing China. China's still 5 times bigger than India, but India did have like a 19% year-over-year growth this year. So I think reglobalization means where's the new supply chain partner, where are the new customer bases to expand your business models?
Okay, well, let's see if CEOs are right again, hopefully, because a great majority of them, it sounds like, are pretty optimistic. Paul, thank you for joining us, for sharing some of these insights.
Thanks for having me. Take care.
Always good to talk to you. Paul Keary is the co-founder and CEO of Teneo.